A very good morning. Terrific Tuesday today. Have a good day ahead. Welcome to today's episode of Morning Wealth. VIX hits lowest level in a year, PayPal's 1 trillion target, and what's happening with Tencent. Those are the three things that we will talk about. The new week started with some calm as the S&P 500 set another record high and the first VIX futures contract closed at the lowest level in more than a year. That may signal the lingering fears of the pandemic are finally starting to fade. The Dow was up 0.5%, posting its 14th record close of the year. The S&P 500 was up 0.6%, another record close, and the Nasdaq was up 1%. Technology shares helped push indexes higher on Monday, rallying in the afternoon after starting off the day mostly weaker. Nvidia jumped 2.6%, Akamai Technologies was up 2.5%. Falling oil prices put pressure on the energy sector. Occidental Petroleum was down 4.3%. Conoco was down 1.7%. The US crude oil fell about 0.3% to about 65.39 a barrel, extending losses after notching its biggest one-week decline since December. AMC Entertainment soared 26%, boosted by news that it's reopening movie theaters in Los Angeles this week. Meanwhile, a handful of stocks rose. S&P 500 Dow Jones indices late Friday said that they would be joining the S&P 500 effective March 22nd. Shares of Caesars Entertainment was up 0.6%, NXP Semiconductors was up 9%, and Penn National Gaming gained about 4.6%. On the yields front, government bonds strengthened with the yields on the 10-year US Treasury note ticking lower to 1.60. It ended Friday at 1.63, the highest since Feb 6, 2020. Yields fall as bond prices rise. PayPal's Dan Schulman said there is no slowdown in online shopping even as cities begin to reopen. The CEO said business will forever be changed. The tech giant is on track to process 1 trillion a year in payments, he added, compared with the 936 billion for all of 2020. Moving on to China, lots happening there, so we'll touch upon a couple of things that's happening. China's holdings of US Treasuries rose by 22.9 billion in January to hit 1.095 trillion, the highest level since October 2019. Japan's holdings rose by about 25.4 billion to 1.277 trillion, the highest since August. Japan remains the largest holder of US debt above China. Total holding of US government debt outside the country rose by about 48.8 billion in Jan to about 7.12 trillion, the second highest total on record. Beijing is pressing Alibaba to sell some of its media assets because of the growing concerns about the technology giant's influence over public opinion in the country. China expressed misgivings about the company's media holdings during several meetings dating to last year. This is according to reports. Government officials are particularly upset about its influence over social media. Shares fell further. Switching to the next big guy in the room, just a few weeks ago, Chinese video game and internet giant Tencent looked near to cracking a 1 trillion valuation. Shifting winds out of Beijing could blow that out of reach for quite a while. Shares have fallen 7.7% in the past 2 trading days following a Bloomberg report on Friday that the company will likely be the next big target for regulators as Beijing takes on the country's internet titans. Remember, Chinese regulators shocked investors by putting a brake on fintech company Ant Group's record initial public offering last minute in November last year. Ant, backed by Alibaba, will now be regulated more like a bank. It isn't surprising that Tencent, which together with Ant dominates digital payments in China, could now be subject to tighter oversight too. China's central bank released draft rules in January regulating the sector. But compared with Ant, Tencent has been less aggressive in the online financial services such as lending or insurance. Tighter financial regulation could therefore be less devastating for Tencent than for Ant, since the former earnings still come mostly from games. But tougher scrutiny will still hurt. The online finance business has been growing fast. Morgan Stanley, for example, valued its fintech business at about 157 billion in its report last week, expecting Tencent to hit a 1 trillion valuation. Slower growth and higher capital requirements could mean investors must trim those lofty expectations. The two-day plunge in Tencent shares have already wiped out about 65 billion of the company's market value. The bigger concern for Tencent is whether the regulatory crackdown will go beyond fintech. China's antitrust watchdog fined Tencent on Friday for failing to seek approval for its 2018 investment in an online education app. Other tech companies such as Baidu, ByteDance, and Didi were also fined. The fine was only equivalent to about $77,000, which is small change for Tencent, but it could be an ominous sign for future mergers and acquisitions. That's what's happening at Tencent. Stay safe and healthy, and I'll speak to you tomorrow.